So let's talk about capital gains tax changes. And these are changes that are going to take effect from 2020 to 21 and beyond. So before we start talking about changes, let's understand what CGT is all about and what relief you can get currently. The first one is private residence relief, otherwise known as PRR. This is the time that you live in the property. So the time that you live in the property, there are no CGT gains, which is typically your own home. You will also have the period of time that you are deemed to be living in the property even though you moved out, and we'll talk about that later on. So there is that PRR is no tax at all when you sell the property. And then you've also got this lettings relief. Now, lettings relief is again a tax-free allowance provided that you've let the property out. And the amount of relief you get is the lower of £40,000, the PRR value, which we'll describe later on in an example, and the capital gain itself. Now, the changes that's going on is PRR will be reduced from 18 months to 9 months from 2020, 21 and beyond, which basically means that if you have purchased a property, you moved out, then, if you sold the property 18 months after you've moved out, then previously you would not pay tax at all. Unfortunately, this now has changed whereby you will pay tax on the 9 months. So even though previously you had 18 months tax-free period of moving out of the property, that's now going to be reduced to 9 months. Lettings relief is also being restricted so that you have to live in the property at the same time as the tenants. Now that is different. So at the present time, if you sold a property and you then moved out of the property, moved a tenant in, you would have got lettings relief. Going forwards, that will now be removed to the extent that you had to live with the tenant to get that lettings relief. And it's probably easy if I describe that by an example. Now, the other side to the changes that you'll need to be aware of is the payment of CGT. So usually you pay capital gains tax 31st of January of whatever year after the fiscal year end has taken place. Now, going from April 2020, another change is that the CGT will be due within 30 days and it will be calculated with the solicitors. What does this mean? Well, the solicitors in question will calculate SDLT to be paid by the purchaser, and capital gains tax will be calculated and paid by the seller. Both of those activities will be done by solicitors. Now let's take a good example here just so we get a good understanding of how this may affect you if you sold the property pre-April 2020, 21 and after that period. So let's take an example here whereby you have a property, you've had it for 3 years, you've lived in that property for a period of time as well, but eventually you sell it after you've tenanted it out. So you sold the property for 200,000 net of sales fees, and then you deduct from that the £100,000 purchase fees, which also includes SDLT legal costs. So you've got a net £100,000 profit there. What I've tried to do is give you an example of before 2020-21 and after that period of time. And you'll notice that the sales price, the purchase price and the amount of profit hasn't changed at all, and therefore we're comparing apples with apples, and we'll see the extent. Now, before 2021 comes into play, this person would have £100,000 profit, but because they have private residency relief of 83,333, try and say that quickly, and you have this other relief called lettings relief of £40,000, you can see that this person has no taxable profit and therefore no gain tax at all. After 2021, sadly, things change. Profit is still £100,000, but their PRR is reduced because it's 9 months after they've left the property, not 18 months, and therefore the relief is restricted to £58,333. They don't get lettings relief because in the first example, then they got the relief because they moved out of the property and moved the tenants in. In the second example, same situation, but you no longer get the relief unless you live with the tenant. So that relief has been removed. This means that this is now giving a taxable profit of 41,667. No tax before these tax changes at all, and we're ignoring CGT allowance, annual allowances, and we are assuming 28% tax in this regard. So therefore, after 2020, you will see that the taxable profit is now deemed to be 41,667, giving a tax liability of 11,667. That's a huge amount of change for you to be to take on board, and therefore a significant tax change, and it gives you more of a question about how and when you sell your properties. And we thought, well, what are the solutions? I don't like to just give you the problems. I think it's always better to give solutions hand in hand with that problem. One thing you can certainly do is move into a buy-to-let property to get PRR. Now that does of course mean that you've got a buy-to-let mortgage. You'll convert that to a residential mortgage and you'll stay in that property for at least 1-2 years. But at least then you can eventually, when you do sell that property, you do get private residency relief, which will certainly reduce the amount of tax that you'll pay. You could move your family into that property with you. So if your children have moved out or they've got married and they've split, they can move back into your property, and as long as you charge them rent, then that could give rise to a lettings relief when you eventually sell the property. Now, of course, you don't want to move them in just for tax reasons. You've got to love your kids to allow them to be moved in. But it's sure a way of reducing the amount of tax that you have. And don't forget that you can rent out your property to a tenant, and you will get this £7,500 tax-free income per year from that property. So, you know, not only do you get tax-free income, but you also get this lettings relief when you do eventually sell that property. Don't forget, you can use a deed of trust. Now, if you've got a property that's solely in your name, why not use a deed of trust to transfer beneficiary entitlement to your husband, wife, civil partner, for them to also benefit from the PRR and lettings relief, which also they will get a CGT annual allowance as well. So hopefully all of those things will help you to reduce the capital gains tax.